morning, it's Brian Egger with BreakingCall.com on the morning of June 25th. So Carnival is up about 3% this morning after the company reported second quarter earnings of 9 cents, which beat the consensus and the midpoint of guidance, both of which were at 6 cents. Carnival also announced it is splitting the CEO and chairman roles with a new CEO appointment. That was not expected, but the stock's reaction so far seems fairly muted. Now, that all said, not much has changed fundamentally, and the earnings report is probably a fairly neutral event for two reasons. First of all, the fiscal second quarter beat was entirely due to the timing of SG&A costs. The demand outlook is basically unchanged since the company provided mid-quarter guidance back in May, with revenue yields expected to be down 2 or 3% this year. Secondly, despite the second quarter beat, Carnival maintained its full-year earnings per share guidance. So I'll now turn it over to my colleague Mike Andrade, who will provide some technical outlook for Carnival.
Thanks, Brian. Now we will look at the charts for Carnival Corp. The stock is currently trading up about 5.8% and is pushing above resistance at the recent high. The stock has been working to establish a support base near the 61.8% retracement, which is in the $32 area, and has made one higher low. Bottom line on CCL is that we do not have enough evidence to tell whether a base has been formed and a reversal is underway, or if we are still stuck in a trading range below resistance. Near term, a bounce was due, but we need to see momentum build on the upside in CCL before getting more aggressive on the long side. Looking first at the weekly chart, the stock has been in a trading range with a slight upward bias since the 2011 correction low. The stock remains in the channel and could have found support just above $32, but the chance of a retest of trend support closer to $30 is still significant. Switching to the daily chart, we see the stock basing and essentially holding support close to the 61.8% retracement. We have an initial break above the near-term downtrend line, and now a test of overhead support is likely. The recent high was 34.31, and a close above there is the first objective. We then have a gap overhead at about 35.04, and then another high, prior high, that's near the 200-day moving average, which is in the $35.75 to $36 area. That is a significant barrier level near term. Below the 200-day moving average, we would view this as a trading range. Important support levels to watch are $32 and then about $30.